Good morning, viewers. Welcome to the Proshare Hard Facts program, where we discuss economic, business, and financial market developments with data and robust analysis related to households, policymakers, and businesses. Our second edition will discuss unlocking Nigeria's economic prosperity through the capital market, as we assess the quest to achieve a $1 trillion economy through a vibrant and robust capital market ecosystem. Our second guest for this program is the Group Chief Executive Officer of Carry Asset Management Limited, who has over 3 decades of experience in the financial market. I want to welcome Mr. Johnson Chukwu. Nice to have you.
Thank you for having me.
Thank you very much. Our team of discussants for this program are Mr. Lufemi Oyemi, MNI, the founder of Proshare.
Thank you.
And Mr. Teslim Shitta-Bey, Director of Research, Proshare.
Thank you.
Great to have you.
Thank you.
Before we begin this conversation, we would like to inform all our viewers that Proshare does not promote or support defamatory or disparaging remarks by our guests. Any statement made here is solely the view of the guest and not Proshare's opinion. Let us begin by asking Mr. Chukwu, looking at the year 2024, what were the impactful events and activities that shaped the Nigerian capital market from your perspective?
Once again, thank you for having me and Happy New Year. Well, a couple of things actually shaped the Nigerian capital market. One, starting from the beginning of the year, we saw market respond to policies of the government on liberalizing the economy. The first month of the year, the market gained about 35%. And that was on the premise that the economy was going to see a revolution based on policy changes. Among those major policy changes were the removal of subsidy on petroleum products, the harmonization of exchange rates. So the market felt that these policies were market-friendly, and the market reacted positive. Subsequently, by the time we got to the month of February, the central bank monetary policies revised, not the monetary policy, the central bank revised its monetary policy direction and increased rates on short-term federal government debt instruments about 18%. That's T-bills. Yeah. And then subsequently, that increase in rates was sustained throughout the year, that to a point, sometime in November, the interest rate, discount rate on 364-day bill was as high as 23.5%. And the central bank also increased the monetary policy rate by 875 basis points. So these factors drove market activities on the negative side. So you realize that the market closed at about 37.6% last year, but 35.5% of that was actually gained in January. So the other months we saw fluctuations of market gain, market losses. Marginal changes. It was only in December that we saw the market gain about 5% after the January gain that partly offset the losses the previous months had accumulated. So those are the 2 major factors that drove market activity. Other factor that we can also attribute to, if you look at the sectorial performance, you also observe that market responded to the acquisition of AG by Rwanda, and market also responded positively to the acquisition of Seplat, of Mobile by Seplat, the approval of that acquisition. Those are factors that drove, major factors that one can say drove market activities in 2024.
Very, very instructive. At this point, I know we'll need to have further conversation on developments around the capital market and the growth of the economy. So I would allow Mr. Oyemi to
I must thank Mr. Chukwu, whom has consistently presented the factual things about the market. Let me piggyback off what you said around the developments. In the later part of the year, I think we had Aradale, right?
Yes.
Which was a significant shift to signify the purpose for which NASD was set up. And we had one movement. And you remember all those years we started AIM, never worked in there. There are a couple of things that are bothering me. But the central thing I want to start this conversation with is to ask you about how is the capital market positioned truly to actually be a catalyst for a market-led GDP growth in the economy. Now, the government has said 1 trillion in 2030. There is another document that talks about a 4 trillion economy in the next 20 years thereafter. But I think in terms of the capital market being an enabler, what are your thoughts around it?
Well, what I would say is that the capital market does not exist in isolation. Capital markets are an integral part of the general economy. And policies that affect the general economy also have direct impact on the capital market. Take, for instance, capital market being a catalyst for a GDP of $1 trillion in 2030. This is 2025. We're just 5 years shy of 2030. And our GDP is in the region of 300 billion. If after the rebasing, I'm not sure we'll have anything above 400 billion. And the GDP, government projecting GDP to grow about 4.6% this year. GDP grew about 3.2% last year. At a compound annual growth rate of being 10%, you're not going to have from 400 billion, assuming we get to 400 billion.
Yeah, you need something like a 12-point-something% growth, double-digit growth
yes,
rate.
10% growth. You're not going to have anything close to 1 trillion naira in 5 years. But the government had projected the economy would grow at 4.6%. So if government projected the economy at 4.6%, even if you look at the medium-term expenditure framework projections, the government has not aligned its planning purpose, its overall objective of growing the economy to 1 trillion. Because when that is aligned, that's when the jigsaws will fall into place. And what I mean by the jigsaws falling into place is that we need to ask ourselves which sectors of the economy are likely going to grow at double digits. What incentive does government need to provide to those sectors to grow at double digits? Because you're not going to throw resources at every sector of the economy. You look at what are those sectors. I always say this. If you look at the sectoral growth, performance in third quarter of last year, you observe that the fastest growing sector was the finance and insurance sector, which grew about 30%. The other one was transport sector, which grew about 12%, but transport sector accounts for less than 5% of the GDP. So its weight is not so significant. And what can grow in that area? Maybe you restore rail services in between Abuja and Kaduna. Beyond that, there is no basic infrastructure that has been built that will catalyze a stronger growth in that sector. Which highways are we constructing today? Apart from the Lagos-Calabar coastal highway. Then when you look at other sectors that have the potential to grow, you look at which sector accounts for a significant portion of the GDP. You start with agriculture. Agriculture accounts for 8% of the GDP. Agriculture sector growth rate in third quarter was 1.14%. You look at the next one, the telecommunication sector, about 16% of the GDP. That sector grew about 5%. Okay, but that sector has seen consistent decline in growth rate. And that sector is a major catalyst for economic expansion because of the multiplier effect of its service provisions. Then you move to the next sector, the trade sector. The trade sector grew about only 0.6%, 0.69%. Call it approximately 0.7%. But the trade sector accounts for about 15% of the GDP. Then you move to the next, the manufacturing sector, about 8% of the GDP. It grew at 0.9%. Then you now look at how will these sectors catalyze economic growth. One, if you start from the order of the size of the economy, you look at agriculture sector, about 28% of the GDP. But the agriculture sector is not formalized. So we ask ourselves, how do you formalize the agriculture sector? We need to move to the point of formalization. You talked about that there. Because there is a process that he has gone through to make it ready for listing. Today, we have only two operators listed in a sector that accounts for almost 1/3 of the GDP. What do you call it? Okomo and Presco. They are inconsequential in terms of market capitalization. Then you move to the next sector. You have the telco sector, which I said that seems consistently slower growth rate. And why is it so? The government, which I said we need to have an overarching economic plan that will drive the plan to grow the economy by 1 trillion.
I'll take permission. I just needed some clarity from you. So numbers are numbers. There's absolutes, there's relativity with numbers. If me and you were sitting in a room advising the president and saying, how do we achieve it? The obvious fact is that we need double-digit growth. And the president asks us, where am I getting the double-digit growth from? So the Proshare team took a look at those sectors and reconfigured it into economies. Now, the whole idea was we took 46 Teslim's team, 246 sectors into economies. I'm setting up so that it's not double questions for him.
Yes.
And then we then did that. Now, when he mentioned the issue of Aradel and the issue of about preparing it ready, that means that we have to take efforts into our public sector to understand how do we get market valuations for this entity. But market valuation is different from GDP. So if we step back to the GDP issue, to say, if we reimagine the economies, not of which sectors are belonging to them, I have two major concerns about that when I say if we reimagine the economy. You remember when we reimagined telecoms?
Yeah.
Nobody thought that thing would just leap. All we did was a significant policy change and we reimagined it and we achieved the GDP impact. Imagine what we did concerning the creative industry as well. No government funded, well, we just reimagined it. And what changed that thing was what happened in telecoms opened the space for so many things to develop a new economy. And that's what I was really going for. I personally am biased, and I must say, is that I believe Nigeria is underperforming in terms of its capacity and its productivity level is low. But then, is it possible to reimagine? I've said that so that I allow Teslim.
Yeah, thank you very much. You've raised very fundamental issues that we took a look at. We took a look at our capital market report, where we, like you pointed out, we looked at the 6 sectors of the economy, and we said, no, don't let us look at it as sectors. Let's look at it as sub-economies. So we reduced them to 14 sub-economies. And so you have the creative economy. That involves several sectors.
The lifestyle economy.
Yes, the lifestyle economy, the blue economy, which we already have a minister for and all that. And we're saying to ourselves, what needs to change in these sub-economies to achieve that $1 trillion goal? The $1 trillion goal, and I'm happy you mentioned that you look at it at about $300 billion. Well, that would be true at 2023. It shrunk significantly when you look at the devaluation that occurred. So we're looking at anything between $161 and $199 billion currently. So that's a massive leap that we need to do. But don't forget, there's the issue of rebasing. The National Bureau of Statistics has said that it's going to rebase. So with the rebasing, we should see some improvement. How long that improvement will last, we don't know. So let me come to the question of rebasing and the capital market. Can the capital market actually support a rebased GDP? What's your outlook for the capital market and the rebasing of the economy?
Okay, before I take the question on capital market and rebasing of the economy, and can the capital market support the rebasing of the economy, I want to speak a bit on what Femi said about reimagining the economy. And I want to focus first on the creative industry. And he made the allusion that, look, if we had to sit before the president and say, look, how do you want to grow this economy? Let's look at the creative industry. Lagos has one of the longest corridors of coastal line across the sub-Saharan Africa. What are we doing with the coastal line? We are seeing unstructured development around the coastal line, and all the rest. So what has government done to create that corridor into a tourist zone? We talk of dirty December. How do we ensure that, like you have in South Beach in Miami, where the government made concerted efforts to ensure that hotels are established, there's a road corridor, people can run almost 10 kilometers on that corridor, and then you create, personate the land, define the minimum level of development of any structure, define what those structures are going to focus on, like hospitality, film and centers and all those things, event centers, and then that way you intentionally support the creative industry and create a corridor for that creative industry that investors, not just local investors, foreign investors will see there's opportunity here. I'm going to build a 5-star hotel on this corridor. Okay? And those who are coming to Africa, we are not going to be dealing with only dirty December. We'll be dealing with dirty Easter, dirty Salah, and all the rest.
Yeah, I mean, even Morocco too has been able to Marrakesh.
So we allow, but there's no concerted, intentional act of the government to drive development in those business sectors that will both potential to grow the economy at double digits. So, and the question you ask is that how ready or how will the capital market support this? And I say, look, the government has to play its own role. The capital market is going to say, look, there's opportunity here. We can put structures in place. If the government create a corridor, capital market can now set up a fund and say, look, if you are building hospitality within this corridor, this fund is available for you to access. That's where the capital market comes in. And then those funds will be available, specified to certain areas where we have defined the risk and we can also see the opportunities. And we can do basic analysis and say, look, if you raise funds, if you access this fund to invest in this corridor, these are the growth potential, these are the income opportunities you have here. And therefore, the funds will be paid back. The fund will give a return estimated as well as so rate. But there has to be the government in well thought through policy direction to drive economic activities.
What exactly is those policies? Because when we mention policy, it looks like an abstract term. You mentioned some good areas which falls under regeneration principles. So if you cascade it, we said, let us reimagine the economy. In reimagining it, you've given a very good example. But there are some obvious ones which are available for the private sector to do the heavy lifting on. Say, for example, we want to regenerate Surulere, for example. The National Stadium has been dead for about 20 or so years. And we convert it into an O2 Arena type center. Because we don't have any major space where we can hold a huge international event or multiplicity of events. Who comes up? I'm just using that as an example. I can also mention the issue of the National Theatre, which has been done, but nobody used that one because it wasn't costly. Who is the person who comes up with those ideas and how do they get it done? Is it the private sector or are we going to go through NESG or somebody to get the government to pass such policies?
It can come from the private sector, but the challenge with coming from the private sector, it doesn't come with the, what they call the momentum. Is it momentum or the mass?
Yeah, because people will be doubtful.
Yes.
We don't know whether...
I can come up with, I want to do National Theatre. It's a different thing when the government said we're creating an entertainment corridor. And we're going to
so we then tap into
Yes, every one of us will go and tap into it. Even those who have not thought through it, see this how we see opportunities in that area. And we have a proof of concept. It's not as if what we're saying, like your question was actually that these policies, we talk about policies, how would these policies come about? And it has to be intentional. The first starting point is the government must know what it wants to achieve. And it seems that a lot of times we have seen government, other than Obasanjo government, the governments have lived by the day. They wake up in the morning, they hold meetings, they have visitors, they drink coffee, they make announcements to make us happy, and then all of us analysts, we start debating and throwing all the balls in the air, and then nothing happens at the end of the year. Let me give you a proof of concept. The Obasanjo government got into power, recognized that we didn't have a structured telecommunications sector. He decided to set up the NCC, Nigeria Communication Commission. He appointed a person of credible and knowledge, to be the vice chairman or whatever they call it. And then they developed the legal framework, they developed the commercial framework, they developed the basic, and they got experts to advise on the process of going for an open bid.
Okay, I see.
And then they invited the world to come and bid for GSM licenses.
An open, transparent
Catch your mind back to the era of Sani Abacha, who tried to auction the licenses in an unstructured manner. And we ended up with, I can't remember the name of that company, that was given a license but they couldn't perform. But by the time it was sold through an open bid, government moved away from era where the government was spending money for budget allocation to build masts under NITEL, Nigeria Telecommunications Commission. To an era
they disaggregated all the value chain.
The government now attracted even capital flow of over $1 billion because each three of them paid about $285 million. Government earned income. Government has not spent a dime to build infrastructure. We now have broadband infrastructure here. We have in almost all the nooks and crannies of the country, telecommunication masts. And it was built by private capital, but government did the heavy lifting, creating the legal environment, creating the economic environment, creating the commercial environment.
It's getting interesting now.
Yes, it really is, because
We are now getting to the brass, because I can see now that this is what has been missing in every single thing, because we haven't taught the whole process through.
Interestingly, there's actually a book on what you said, where Nigeria was the center of attraction. It's called The Prosperity Paradox. Professor Christensen and Efosel Jomo.
Okay.
And they mentioned this, that you need market creating innovation that is public sector supported. That was the whole central thing. Market creating.
Late Professor Christensen.
Yes, late Professor Christensen. Now, why is it so difficult to jump from the telecoms model to other sectors?
Which has worked.
Which has worked. Why is it so difficult to replicate? Why
Not only that it worked, it then became an enabler for other sectors. Financial services sector, fintech, creative industry, the whole service industry was built on the back of that single infrastructure.
Just one move, multiple outcomes.
And we could not replicate that in the energy sector up to today.
So what's the problem?
Simple problem, all of us agree, is leadership. It's just a single word, leadership. And it's very simple. Obasanjo. I just want us to remember, because all of us, four of us here, can remember very well the era of. There was a bid by Dr. Mike Adenuga that did not meet the payment time by 1 day. It was rejected.
Yeah.
When I had to use the name, every one of us know who he is. By every standard, in any way in the world, he is a major power broker. Wherever he is, whether he's a British, if he's an American, he's a power broker. The Obasanjo government stood its ground and returned that money. That way, they sent a message to all the licensees that you must abide by the terms of this license, and that if you breach any of them, the government will wear the stick. That's what leadership is all about.
And the money you paid will be forfeited.
So in the next 5 minutes, we want to just look at listings and the listings in the market, because it's a very, I know it's technical issue, it can't take so long.
He's trying to manage all of us.
I know, the first level conversation. Very interesting, very interesting. So, Mr. Johnson Chukwu, I mean, we're looking at how we can really attract more listings in the market. It's really important, reflecting a market to GDP size. I remember in Uyo, Akwa Ibom State, that's my state, we had this capital market session, which our chairman was the keynote speaker, but Mr. Teslim spoke there on his behalf. And Proshare was very clear about
you didn't invite me because you don't come and
the need to really deepen the market through listings and enabling environment.
Mr. Chukwu, just before you answer that question, let me just put a chaser so that I can support your time management.
Yes, yeah.
Now, last year, the London Stock Exchange saw 88 delistings and only 18 listings. The NGX saw an announcement or actual delisting, 13 in number. And how many listings did we see? 3, actually. Thankfully, as our chairman has said, Aradel made a transition from the OTC market to the official market, which was a good development in 2024. However, the only two other companies that got listed. So what's the problem? Why are people in such a rush to delist? It's not only in Nigeria, it's happening in Europe also, where we're seeing an increase in delistings.
Okay, let's start from why our company delisting. The post-listing requirements of most bosses are quite onerous. And we're now dealing with an era of highest level of transparency because of social media. So you can be sued just because you are a quoted company. And because of multiplicity of communication channels, information dissemination channels, listed companies may suffer unintended negative financial costs should the market take them up, or should the media take them up. So that it has become one of the concerns of quoted companies. If you look at even the Christendom, there are some ministers today are shying away from making public pronouncements because they say those things are taken out of context by the social media activists. But back to how do we drive listing? There are certain things you can do. You can't do much in terms of, can anybody control social media? The answer is almost no. So we have to live with the reality of social media. The only thing, you conduct your life affairs in such a way that there are few negatives that can be picked on and can be ballooned or projected. The key thing for our market, for instance, is that we need to go through that formalization. It is very critical because if the company is not formalized, a lot of the business, if you go to the trade sector, almost all the business in Nigeria are mom and pop businesses. Unlike if you go to a country like South Africa, where the retail sector is highly formalized, and that's why the likes of the games, ShopRite are listed in South Africa. If you look at our own local trading platforms, the closest you have of any, you can say the retail outlet is Ebano. And I don't know to what extent they've gone in terms of their corporate governance evolution. So, but we need to go through some level of knowledge. If you go to the agricultural sector, 99% of agricultural activities are subsistence farming. Okay, so you need to go through that. If you, beyond the telecommunications, because that we had an intentional act that formalized it. Okay, if you go down further, you have the oil and gas sector. The oil and gas sector, yes, the few we have that are structured, the likes of Wando, the likes of Seplat, are listed. If you don't have the structures in place, and it's still a man and a woman that owns the business, that you have multiple of the local the upstream operators, you can't come to the market. So there must be concerted effort to create incentives for people to have their businesses formalized. It could be some form of tax holidays that, look, if you put the corporate governance in place, because it's also help the government to track revenue, track and trap revenue if the business is formalized. So the government can actually pull back on taxing some business that are newly formalized and give them some differential tax rate for the first 5 years. And that way, you have structures in place that will enable you to tax them and also enable them to come to the market. But it has to be driven by incentive, because what the business operators are looking at are disincentives, costs. What are the costs of getting listed? And then bear in mind that Nigeria, you don't have cheap cost of funds. So for a listed company that's going to go to the market to borrow, it has to either do equity, and we know that the cost of equity is actually higher than the cost of funds. Cost of debt. So the attraction to get listed to access funding used to be one of the things we touted about. It's no longer so compelling. It's all about, do I have an opportunity to liquefy my investment? And that becomes more compelling when there are multiple owners. If it's I and my wife that owns the business, we don't have a compelling need to liquefy the investment. But if we are 100 of us that own it, where I am not such a critical decision maker that I derive a benefit other than dividend. So for a large share ownership, the shareholders benefit come either in form of dividend or capital gain. For very close management, part of it is that their lifestyle is funded by the business. And that's why formalization is important, so that the government can eliminate those things. You know, overseas, you can't use company money even if you set up a company. I had an opportunity of wanting to buy a property in England from a company I founded. And I funded, and the company made income. And the British lawyer was saying, look, I need to have a proof that if you move this money, the company has assented to it, and it will not affect the company's business. It will not. I said, this is my business. He said, no, it's a company. That's what you get from a formalized business environment.
May I ask humbly, so are we stuck to a traditional model of how we understand how markets interact with each other, or are we opening ourselves up to the possibilities that The very essence of having a capital market, its primary purpose is to offer what? Access to what? Capital. Cheaper cost of capital. Whether you are looking at it from a traditionalist position or a modern position, that concept has not changed. Now, what has changed, therefore, in my estimation, are about 4 things. And I'm picking most of them as I'm writing based on your points. One is that we seem to forget that the psyche of the investors concerning what happened in the past has remained a permanent memory. And actions taken up to now has not addressed those memories about the market. And the notion of the market as a source of capital has been replaced as a source of making money, rather than a source of attracting capital, but a source of making money. So you find the default is that you have listings by introduction, which just presents itself as if it's a listing, and nobody is actually looking for capital. Second is that you find that predominance of the money market play in the equities market space is that these are uncomfortable conversations, but I'm hoping to have with you. The third one is that the absence of incentive is one of the few things I always have a problem with, because the very notion of incentive is that if I stay in that market, it means I have a higher compliance rate, which means that I must be given a privilege in terms of when it comes to either I bid for a job, I do whatever, I'm applying for anything. And in terms of reputation, I get protection from the exchange itself, who then says, no, even all this idea of social media, the exchange therefore takes on the responsibility to say, I would protect this particular person because I have subjected them to the most rigorous standards ever. And as such, the argument therefore falls on its head. Is it that somebody drops the ball? And the last one is the issue about, and I really want to be careful how I say this, is the fact that once your regulator loses his main focus to provide what you call the necessary oversight and whatever, i.e. in terms of the time it takes to resolve issues in the market, there's a real disincentive in the market, because if it takes me 2 years to resolve an issue in that market, I don't want to be in that market. I'm not talking about just investor protection, I'm talking about the core mandate of being a very fast resolution mechanism. Now, when you lose all these elements, there are new capitals, because on top of all the 4 things I mentioned, there is a 5th major issue, which is from the financial accounting position. That means the basis of valuations of companies have evolved. And that we do not really, sometimes in some places, your market cap means shit, really. And so I can value a company higher than you, who does not even have as much profit than you. And that I do not also believe that paying dividend, which has been a traditional thing for which we sold to people, is the best way for value identification. So I must have said a lot, but I needed to say that to make the point that I need from you as an experienced leader to help us understand what is it that we are missing in terms of our understanding of how the market plays.
Okay, just before you answer that, so that I can also constrain time into small sections, is this. We had a conversation with Professor Uche Waleke, and he came up with this notion called IPO, which was interesting for me. And then he said the critical elements are first and foremost what you said earlier, incentives. Then he says privatize. Then he says optimize IPO. So we need to provide the incentives, like he said, but couldn't we also get public entities to privatize? And then based on that, their operations become optimized. So while you're answering his questions, maybe you could just take that. Thank you.
Okay, starting from Femi's question, I think the motivations, the primary driving factor for a robust capital market, which is for companies to access funds at cheaper cost, is not really mutually exclusive to the motivation of investors to make profit. No businessman goes into any investment with the intention to lose money. And businessmen are not Father Christmas. Then when they are buying stocks, they are not buying stock because they don't want to give you money. They are buying stock because they want to make money from you. So it's either they're making that money from you from dividend payment or they're making it from capital gain. But the basic thing is that the market must be able to meet the needs.
It must match.
And that's why I always said, for you to have a vibrant primary market, you must have a vibrant secondary market. Because it's the vibrancy of the secondary market that will ensure that liquidity is in the market, that there is a lot of funds looking for investment instruments. So the issuer have a motivation to come to the market and say, look, I'm looking for money, the money is there. And then the investor is saying, look, I'm giving this money to the company, I'm holding an instrument that if I need money tomorrow, I can sell it, there's liquidity in the market. It's not likely I will sell it at a loss. So the market is profitable. The market is gaining. And then the investor is also saying, look, if I want to hold it for the long time, at the end of the year, I get something. So those motivations must align and must exist in the market for the market to function effectively. But the key things we are saying is like, why is our market not functioning perfectly? Of course, it's not that our market is poor. I mean, nobody can say that. We've seen a market that has seen a consistent year-on-year appreciation for the past 5 years. In 2000, it was about 50% capital gain. In 2023, what 47.9% capital gain, and last year we were dealing with 37.65% capital gain. So the market has remained buoyant, vibrant, but there are still huge gaps, which are the issues we are discussing. When you talk of issue about regulatory intervention, which quoted companies should enjoy, because quoted companies should actually be seen as more transparent, have higher corporate governance standards, are more secure as investment outlets, should be able to attract funds even in the debt market at lower cost because they are more transparent and more effective. You are sure of your investment. They should actually be able to borrow at negative pledge. So the benefits, and then that also means that if anything comes up, the regulator should weigh in and say, look, we have the quarterly returns of this company, and these allegations are not correct because we are sure of what they're publishing. And there was a case recently when some people wanted to take GT Bank to the cleaners, and the central bank weighed in. And that's the role of a regulator.
Exactly. That's the point I'm trying to say.
And the regulator came and
offer
said,
protections.
And said, look, these allegations are false, and we can assure you that this bank has no issues. We regulate it. We are seeing the operation on a daily basis. The allegations are false. And
Excellent.
Because some people were already beginning to worry about those allegations. But assuming that the regulator did not come up to dissuade or disabuse the mind of people who have listened to them.
And that's what causes runs on banks.
So there is a compelling need for the regulators to be able to stand behind the regulated entities, to weigh in when they need to weigh in. It's not just about demanding for regulatory fees, imposing sanctions when there's a minor breach. There's also be benefits of belonging to that halo class of
the privileged class.
Yeah, so then the government also has a role to play. Whatever is not rewarded is never effectively focused on. If there is no benefit, we say that economic agents are rational. They go to where they get the best return or the best benefit, or the way they will suffer the least cost, or where both of them are present, they will go more to. So least cost and more benefit. So the government must, if we want to drive formalization of the economy, if we want to drive the capital market to act as the major source of funding for the economy, the government must create those right incentives. And the incentives will include, we have talked about, who says that the government cannot say, look, quoted companies will have a differential dividend payment, dividend tax. Current tax is 10%, quoted companies 8%. That 2% will incentivize so many companies to come and quote that the incremental
it will then cut off on their cost of listing.
Thank you.
It sets off with
Yes.
each other.
So why are we saying that? If you do that, some of the companies that got delisted last year may not have done that because the shareholders at the general meeting will never approve that delisting.
But why did well, I don't want to say you people because now I'm a member of the Stockbrokers Association. So my natural instinct is to say you, but I was just saying anyway. What was the role of the capital market with the fiscal and tax reform committee, therefore?
Well, Femi, what happens is that when recommendations are made and they are not taken, it looks like no effort is made. And the reason why I say that if I have a private meeting with you, invite me as a member of your committee, and I make recommendations and those recommendations did not see the light of the day, I'm not going to go to the street and say, look, I made the recommendation to you and didn't, because I have betrayed the confidentiality associated with being a member of that. So whatever is the final decision, I will subscribe to it because I'm part of the process that made those final decisions. Even if the recommendation I made is not part of it. So I think in different fora, some of these issues I'm raising have been brought to the limelight. Whether they've seen the cost light of the day in terms of approval by the government is a different thing. But we must keep pushing because we must change the narrative.
Mr. Johnson Juku is being diplomatic. The truth of the matter is that it shows that the lobby and influence and positioning of the market, and I'm saying this within the context of the fact that I believe strongly that the capital market has a strong role to play in delivering a higher GDP for the country by opening up spaces, by providing capital for most of those engagements like the infrastructure funding. I agree with you about the telecoms, but then the markets have changed and we need some level of assurance on like what we had there. But that lobby must be sure to enable government see, we should go beyond just talking to showing models whereby we show where the cost benefits of these actions actually deliver higher revenue to government. And I'm not sure that the government has been able to receive that from, let me use the word, from our side of the, I don't want to say from each side. Otto.
Okay, I mean, very, very interesting conversation. I mean, we just have to work within the time. But let's look at something that, of course, impacts the system and, of course, regulatory law. And that's the 2024 to 2026 banking recapitalization. I mean, remember that when we launched our Tier 1 banking reports, it was there that you said, it's time to recapitalize. You were way ahead before the CBN.
No, he was way ahead of everybody, even us. He was way ahead of us.
Yes. And we've seen progress in terms of technology, but of course, Proshare also raised that concern of the verification of the public offerings, which was a bit delayed. And of course, you also spoke out too at the capital market correspondence, the need to improve this process. So when you look at the verification now, are we seeing improvements comparing between now and that of 2004, 2006? And in terms of making this process more effective so that shareholders who have been complaining will begin to see value in it?
Well, there must be some improvement. Some verification actually seem to have been concluded faster than others in the economy. But I think we're not fully leveraging on technology and facilities available to Central Bank in terms of capital verification. Every investor has a BVN.
Exactly.
So the
BVN,
BVN,
common denominator.
Yes, the CBN and every regulator, including the Nigeria Financial Intelligence Unit, EFCC, police, they have access to. Once they have your BVN, they can actually collate your balances in every bank. So if Central Bank has that, what stops the Central Bank when an applicant's application is received in the bank? You want to verify, you just check where the money came from. The money, 80% of the monies would have come from the individual or corporate account that you can really match. So if there is a credit anywhere in the Nigerian banking system, as to determine whether the funding, what are the Central Bank trying to verify? One, the funding was not from borrowed funds. Two, it wasn't from process of illegal activities. Okay? And then the people have the mandate to make the investment, particularly for corporates. So if those are the three primary objectives, through the BVA, you can eliminate those two. Did the money come from any credit? If the company has it, the company or individual has any credit anywhere in the Nigerian markets, we will see it. Okay. So if you need clarification, you can probably get that clarification almost within an hour or two. Did it come from process of any legal activity? You can also see that. If it's not coming from the banking system, you put packet aside, and that's the other ones you are verifying and say, where did the money come from? The other ones are the money that came from asset management companies. So you ask them, give me proof of the sale of the asset or the balance, their balances, their fluid balances from the banks. Once you determine that you are home and dry, then, so if this window exists, there is no justification why verification should take more than 2 weeks. And so that I feel that we're not fully leveraging on the technology at the disposal of the central bank. Central bank has access to log into any bank's platform from their offices. So they can actually query anything in the banking system. So I don't know why it's taking so long. And some of the things they are demanding for are not relevant. Why do you want the company to give you 3 years of auditing statement? What do you want to verify? Are you saying that you don't have records of the company's position, financial position? And unfortunately for Nigeria, because we are not yet a formalized economy, the audited financial statement have little relevance to the operation of most private businesses. So why do you want to rely on that? So what do they do? Get a Tom and Harry to cobble together an audited financial and put a stamp and say this is a financial statement. Well, as you have a more authentic data to see their turnover, to see the source, who are their customers and customers' customers, where the process of cash flowing to them. And then we could do a more tidy job using the technology and infrastructure that we currently have in the banking system. That, I think, is what is missing, and I think the central bank needs to review its approach to verification of capital.
Sorry, I have to comment here. This is an interesting subject on two perspectives. One, I agree with everything Mr. Justice Chukwu said, but there is also the other element which I think is important for the purpose of the conversation to raise, and that is the role of trust, who then acquire interest and buy things through nominees and whatever accounts, which are not subject to lifting the veil. And I think it is where, to be fair to the CBN, where they have the challenge in lifting the veil. Most men, and I'm sure you've seen, but maybe for us, we have been involved in governance-related issues. That has been a concern. Where people hide under different levels of, and so the process of lifting the veil is there. But to your point is that what exactly are they trying to? You can pass it and then you can always go back to it later and hold on to that.
Disqualify it.
And disqualify it or hold on to the funds or seize it as. So I just needed to make the point as to the process they're doing, but then it raises the other question for me. Because I know Otto wants to move in a different direction, but I must raise this other question. Is that there seems to be the advent of the activist investor in our market.
Like Bill Ackman?
Yes. Actually, the scenario we've seen in the last 2 years follows the model of the Bill Ackmans of this world. And I particularly think it can really be a very positive thing for the market. But then it also has thrown up some uncomfortable conversations in the industry. Without, to use the words we use in the capital market, without admitting to anything and without denying anything, would you be free enough to share your views on that particular point?
Okay, my views on activist investors is that it's very good for an economy. And why is it very good for the economy? Because if you look at the shareholding of a lot of quoted companies, you find out that they are so fragmented. They become, some of the quoted companies become like a goat without owner or multiple owners that sleeps in the outside. Okay, so when you have an activist investor, the activist investor acts as if he's a core investor, and then protects the interests. In order to protect the interests of every other investor, and then drives the business management. Because you have to also bear in mind that when there is no core investor, the agency relationship between the agency conflict between the management and ownership becomes exacerbated, becomes heightened, because the management can now do whatever they want to do when there's nobody that's actually breathing down their neck. And if you're looking for the fragmented investors who are in 1 million here, 2 million here, all they just want is whatever decision the directors and the management take will be acceptable to them, because they have minimum headroom to adjust for that. So we need activist investors to reduce the agency conflict between management and owners, as well as drive the growth and success of this entity that seem not to have core investors. And I'm sure you know there are some examples within the Nigerian space.
I'm happy with that reply. So I ought to thank you for the privilege.
I think we will go on to comments. We really had a very robust conversation. So we just want to take some comments online. People have joined online to follow what we're discussing. Someone anonymous said, brokers are believed to be more interested in commission than market growth. So he's asking Mr. Johnson Chukwu, as a seasoned stockbroker, what is your view on this statement?
Well, that's fallacious, and it's because it's based on false premise. Yeah, and I'll explain that further. You see, brokers derive their brokerage commission based on market activities. The larger the market activities, the bigger their income will be. The more listing and the bigger the exchange is, the more transactions are there. So it simply means it's based on a false premise, which means that brokers do not charge, brokerage fee is capped at 1.35%. And you hardly charge 1.35%. So your income is dependent on it. If you see so much of economic activities that are leading to more listing and more businesses, capital investors are making money, and then they have more motivation to invest.
Yeah, very interesting.
I know. Have you ended?
Yeah.
No, but there must be a question we should ask Mr. Johnson Chukwu.
Yeah.
You introduced him as the CEO of...
Have you joined it? Have you joined that yet? They say we are going to
I'm part of the audience. No, they introduced him as CEO of Cowrie Asset Management. How are you addressing this issue that there are two Cowries in the industry and you are in the same field? And how did it emerge? And how do you want investors to engage with your own firm? I have known your firm to have always exhibited yourself. I have known nothing about the other person. But then sometimes when people Google or they try to do business, it then becomes, I know the names are slightly different, but it's almost similar names. I'm sorry to put
Yes. I can answer you frankly. When the name came up newly, we approached the Corporate Affairs Commission and said, you can't register a company that has very close similarity with our name. And not only that, it's going into an area of business that is where we are. We went to SEC. SEC actually reached out to Corporate Affairs Commission. Corporate Affairs Commission said they were not going to release them because there is a suffix
Wise.
Yes, to their name, and therefore they are different name. So SEC told us to go and do a disclaimer, to just say the word that we are not the same company, which we did. So we're happy they're existing. The space is too big for everybody. The truth is that we are a core financial institution. We manage funds, we are an issuing house, and a lot of the things we do, they don't do. And in terms of, they are quite strong in the digital space.
They are actually.
But we have recognized that, and we're taking measures to counteract it.
Yes.
But we wish them well. They can actually exist while we exist. And what matters is that the taste of the pudding is the eating. So customers of ours know us. Like the Bible says, that the sheep knows its...
Yes. Someone asked a question that, is Fidelity Bank coming with rights issue soon? With this raising capital flying around again? The person is asking, please. But just to viewers, Proshare has the recapitalization watch. It brings out every week. It comes out by Friday. So just keep tabs on it. Follow our website and our social media platforms. But you want to speak to that?
No, it will be presumption for me to answer for a bank.
Okay. Yeah.
I think that question should go to their management. But if I have the opportunity, I'll ask their management.
Okay, definitely.
Maybe the person who is asking wants me to find out from their management.
Yes, definitely. So, Mr. Johnson Chukwu, it's been a very interesting conversation. So, but in 1 or 2 minutes, you want to just give your word on the capital market and what you see happen this year and how it will shape the economy?
Well, I think the capital market will still show a reasonable level of growth this year. The capital market has actually beaten the economic logic that when fixed income yields are high, investors will underweight their portfolios in equity and rather in fixed income. So we think the market will remain strong. There are a lot of liquidity that go into the market. We've seen institutional investors take positions based on the dividend yield prospects. And as we move into the benefit season, one should expect that the market rallies will happen the first quarter of this year towards the benefit season. Because if you look at the third quarter reports of many body companies, particularly those in financial services industry, they both strong prospects for good dividend payment.
My last take will be to go back to my pet subject, the 1 trillion economy. Which sectors of the 46 within our own 14 economies do you think you see activity from, movement from the capital market players? Say, is it in infrastructure? Is it in the lifestyle economy? Which area should people be looking forward to?
I think we should expect the lifestyle economy will, because that both very strong growth opportunities and requires reasonably low level of government intervention. The infrastructure sector will require a lot of government infrastructure intervention. One in either creating the concessions to allow private sector to come in, or creating corridors and allowing private sector to just go and develop. So without supporting government policy, infrastructure development is actually very difficult for private sector to do.
Very interesting. Very interesting. Testing in 30 seconds.
Okay, one of the issues I would have wanted Mr. Chukwu to answer for me is how he sees the possibility of the public sector, state-owned enterprises getting listed on any of the exchanges. And as a matter of fact, in Proshare, we argue that the FMDQ, because it has had the privilege of managing public sector debt, should also be allowed to manage public sector equity, and we should see a listing either on the NGX or the FMDQ. That has not happened, like the NNPC, for instance.
You know, NNPC has been. You want to add something?
No, I'm just saying that we saw the example in Egypt where they listed about 30. No, Egypt.
Oh, Egypt, yeah.
Egypt listed about 30 SOEs.
SOEs, yes, last year.
You know, if you look at Nigerian SOEs, state-owned enterprises, you start from the likes of NNPC. That has been the works for quite some time. And I think NNPC, before they get listed, should actually be unbundled. The upstream business, so that we will get full value and it becomes easy for oversight. When you have a highly consolidated business like NNPC we have today, it will be difficult for you to have a thorough oversight. We should have the upstream business as a separate business, have the downstream business as a separate business, and then have the gas business as a separate business, so that they can actually get listed separately. But beyond that, the other state-owned enterprises, the likes of NEMASA, less of MPA. The challenge we have boils down to that single word, leadership. These institutions serve as a piggyback for government and for public sector to access funding at any time. So when they need to divest themselves of looking for entities where there's always money to access with minimal accountability, it's only when we get to that level of leadership that the government will ready to relinquish these companies to be transparently managed and publicly quoted.
Thank you very, very much, Mr. Johnson Chukwu. Just to let our viewers know that Proshare, of course, has released its 2025 Nigeria Capital Market Outlook Report. And that report is titled The Capital Market and the Quest for a $1 Trillion Economy. For further details of this, of course, visit our website and our social media platform. Follow them to get further insights on it. I must say thank you very much for your insights, Mr. Johnson Chukwu, Group Chief Executive Officer, Career Asset Management Limited. Thank you for coming down to our studio. I know you're always quite busy, but I mean, taking out that time.
We always see him online.
Thank you very, very much.
Thank you for having me.
This has been a very enlightening conversation. And I also want to thank, of course, I will say our guests, yes, for taking our time of this busy schedule to be in this conversation. I acknowledge once again Mr. Lufemi Awoyemi, MNI, founder of Proshare, and of course to Mr. Teslim Shitta-Bey, Director of Research Proshare, who also leading the team to do great work. Thank you very much. We appreciate all your interventions. To our viewers, that will be all for this second edition of Proshare Hard Facts program. For further updates on this program, log on to our website and follow the social media platforms displayed on the screen. I want to Basekong. Thank you for watching and bye for now.